Someone's saying here, you want to do 20%, huh? We could. 20% is definitely risky. I mean, this other AI, like our AI is saying here, it's saying 10% is risky and you want to go 20, huh? I think we know what kind of risk taking stuff you do. I think that'd be pretty cool to see though. I think, look at this. So theoretically, right, if it made $10,000 with 2%, it should have made about $50,000 with this higher amount, right, with the 10%. And theoretically, if we use 20%, it would do even more, right? What it would do is it would have made $100,000 or something. That would have been pretty damn crazy. And what I'm also thinking, another thing I'm thinking, because this is actually good. LOL. Yeah, I know that's ambitious. 20% is pretty crazy. That's very aggressive. Our AI is saying 10% aggressive, as you're saying 20%. Why not? YOLO, right? I'm down to try it. But what I'm also thinking is I would want this thing to make money in normal situations, right? Because this is a strategy. Okay, it makes money when the market goes down. That's great. But what about when the market is not going down? I'd want this thing to actually still own something in the meantime. It should own like SPY or whatever in the meantime. Or we can make this thing like super leveraged. We can make this thing own TQQQ. This is kind of what I'm thinking. What if we own TQQQ in most situations? And then whenever it finds that this thing hits, right, it actually seems to be pretty good at getting RSI and all those other things. That's what it's using here. I think it's using where are the parameters here? EMA, da da da. It's below the 50 EMA and the 20 EMA, and it's an RSI below 50, right? So if we're below the 50 EMA and the RSI is below 50, that's when it enters. It actually seems to be, not a bad thing to do. Look at this. It's up $109,000. So it's up $9,000. So what if I also think this strategy should own something when we are not in the downturn? Maybe TQQQ is one of my favorites. If you guys have never seen TQQQ, I actually love trading this thing. Check this out. This is why I love TQQQ. So check this out. And this is basically the triple leveraged NASDAQ, right? So if you compare this to QQQ, which you guys have probably heard of, the NASDAQ, it does 3x that, right? So if the NASDAQ is up 1%, this thing is up 3%. If the NASDAQ is down 1%, this thing is down 3%, right? So it's much more risky, but also has some pretty crazy returns. Look at the results over a long time period with this thing. Since it started, it's up 24,000%. So basically since 2010, it was founded in 2010, 15 years later, it's up 24,000%. That's 241 times your money. That's flipping insane, right? But the problem is that this thing has these big drawdowns, right? Obviously, it's a lot of risk. And, if something goes against you, if the market falls, you can get hit really hard. So I think that would actually pair very well with our strategy here, which makes money when it goes down, right? So imagine we have a strategy that's leveraged on the way up and has put options on the way down, right? So it actually buys those puts. I think that's a very interesting strategy. So let's see, what do you think about that? Don't change any code yet. Let's see what this thing does. So it's checking the back testing status again. It'd be actually really cool if we could get back, if this thing could read our back test before it even finishes. I wonder if we could do that. I think that'd be a pretty damn cool feature. So even when it's like halfway through the back test, I could already start analyzing it, right? Because right now it's running it, but we're waiting for it to complete. It actually did very well. Look at this. This is $7,000, risking only 2% of the account. That's pretty wild. Okay, bull asset, hold TQQQ when not in a crash, and then bear asset, buy these when the crash is confirmed. Increase put sizing to 10% of the account, and then add 50% hard stop. Yes, please make these changes to the strategy. Let's see what happens here. This is balls to the wall, super risky, but potentially I think this thing could make a lot of money. That's what I think. I think this thing would be very profitable. Look at this. This thing made a 40% annual return on this time period. This is when the market dropped, guys. This is something that makes money when the market actually falls. Right, so we see this return here. This is what it looks like, right? We'll get rid of this. We'll get rid of this. We'll get rid of this. And then this is basically what happened. Check this out. Went up from 100,000 bucks down here. This is February 18th, and then basically made a ton of money as the market was falling. Really nice, profitable thing when the market falls. Okay, let's take a look at the tear sheet. Look at that. Boom. Stock market goes down. Ours goes up. Almost exactly the opposite of what the stock market did. Right? So you see here, this is the S&P 500. It dropped over this time period, right, in yellow. And then our strategy made a bunch of money during that same time period. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.